Hi, my name is Monica Hengespach. I'm an enrolled agent, NTPI fellow, and CEO of Decision Financial Services, and I would like to welcome you to this episode of The Wealthy Wallet. So today I am super excited about my guest who is on this podcast. Not only does she work for Decision Financial Services and is one of my bookkeeper extraordinaires, she happens to have turned out to be one of the bestest of my friends. And today is her last day, even though I'm forcing her to come back one day a week because she's going into retirement. And so I'm really glad to have her on here because I felt every business owner should know the importance of their books, why they're very important, the reason for having them. And then I just wanted to talk briefly about retirement and sort of the struggles and things that one should be prepared for if you are headed into retirement. So, Yvonne, I thank you for being here. I am so glad to have you on this episode.
Well, thank you for having me. I'm glad to be here.
Of course. So, tell me a little bit of why you chose to go into bookkeeping.
Well, I chose because I had a conversation with my ex-father-in-law one day. I was deciding I was going to go back to college, just a junior college, and try to make a career out of something. He and I were talking. I said, well, what do you suggest? And he just looks at me and he goes, well, every company needs a bookkeeper, and that's something that's always going to be around, same way with plumbing and electrical. So I took a couple of classes and fell in love with it. So here I am 30 years later, still being a bookkeeper.
Still being a bookkeeper.
Yes.
That's fantastic. And what exactly does bookkeeping entail?
Well, it entails a lot. It entails making sure that all of your expenses are put into your records, that all of your deposits, your sales, your assets, you name it, you want it into your books. It's making sure that everything is there and that it's properly expensed out so that you know exactly what kind of profit or loss you have, exactly what kind of assets you have with your company.
So, are there some common challenges that business face when they're doing their bookkeeping?
I've noticed that a lot of the challenges that companies face when they're doing their own bookkeeping is they're trying to download from the bank, which I
Don't download.
no, which I horribly hate because you don't always pick up everything. Downloading from the bank is good. It doesn't pick up the expenses correctly. Doesn't always pick up your sales. Sometimes it double books your sales, and it's not the same as reconciling like a lot of people think. The other challenge is that they're having is they want to mix it with their personal expenses, where we've got business, personal, business, personal. You can't have that. It's not correct. And it's hard to explain to them that we just can't do that.
Yeah. That's something that we encounter quite
We
often.
encounter it a lot. And then having to go back and try to explain to the client, no, I'm sorry. I do realize you have to have special clothes or you want to look nice because you're a real estate agent or whatever. That expense for those clothes or getting your hair done or your nails done is not a business expense.
Yeah. And what about, I think one of the biggest things we get too is that they feel that because they've attached the bank account to their QuickBooks, for example, that they're finished, but they're not technically finished.
You're not technically finished. A lot of times when you attach your bank account to QuickBooks or whatever program or software you're using, it will put the transactions in there. Sometimes it double books it, sometimes it doesn't pick it all up, but it doesn't reconcile. Reconciling is taking the old-fashioned bank statement against the transactions that are in your books and clicking off, making sure you've got everything. We've noticed a lot of times, like I said, you're either double booked or some things are left out. With that, you're not getting a true picture of what you are doing with your business.
Sure. And so that leads me to my next question, which is what key financial reports should business owners or entrepreneurs be looking at regularly?
They should be looking at their profit and loss. Profit and loss is going to give you the picture of where you stand. If you're not looking at that regularly or keeping your records on a monthly, even a quarterly basis, let's say you get to the end of the year and you look at your profit and loss, and you're like, my gosh, I've put $600,000 in the bank. Are you telling me I've only made a $10,000 profit? If you were looking at that regularly or on a timely basis, you would know where you're at all times. That's why it's so important to keep those records up to date, in good shape, and look at them on a weekly, monthly, quarterly basis.
Yeah, yeah. There's a lot of times that I've known where clients have come back and they said, "Well, my bank account has $1, but you're showing me on my profit and loss that I have a profit of $30,000. You're incorrect."
Right.
Why would they think something like that? I mean, me as a tax preparer, I'm like, "Well, let me tell you, some things we can't write off,"
Yeah,
but
that's just it. Let me tell you exactly what happened. You went in there and you used that bank account for your personal expenses, or you've taken a distribution. You might have went and took 10 or $15,000 out of your bank account to go do something personally. That's not an expense. So that's why your bank is showing $1, but you're showing a profit of 30,000. Or you think you were going to be able to expense those things, but you really weren't. That's one of the biggest problems we do have is clients thinking that this is an expense, even as far as making a notes payable payment. Like if you have a car loan or you have a bank loan, they have thought that every penny that they're putting towards that loan is an expense, when in reality, the only expense you're getting is the interest that you're paying on that loan.
sure.
Yeah.
Yep, that makes a lot of sense. So, what advice would you give business owners regarding their bookkeeping practices?
Not to wait till the last minute, not to wait till the end of the year, because there are big surprises at the end of the year, especially if you're wanting to have some tax strategy planning. Or that's the main thing. Don't wait until the end of the year. Keep it on a regular basis, whether you're doing it yourself or having someone else do it for you. If you're not sure about doing it yourself, please let somebody else look at it, get the proper training. Don't depend on those downloads from the bank to give you proper records. One of the biggest things I've seen on that is, and a good example is the bank, when they download from the bank going into QuickBooks or another program. First one might come through Shell Oil. You've spent $84 there. Well, yeah, all of us are going to know that's fuel for an automobile. The next time it comes through, Shell Oil might only be like $1.54. QuickBooks or your other software program is going to put it to fuel again. We know that's not fuel. You went in there and you got a candy bar or, a Coke. That's meals or that's sundries. So
Sure.
it's not expensing it out correctly, and you might not get the best advantage when it comes to tax time that you need
Yep.
or that you want.
Yep, that makes complete sense.
Yeah.
So there's a couple things that I'd like to add on the reason of why proper bookkeeping is really essential. And the first one is that business owners, whether you're a sole proprietorship or a general partner in a limited liability company or potentially an officer of an S corporation, that profit, you get a benefit. It's called a qualified business income deduction, QBID. And what is that? That's a 20% tax write-off of your net income. Well, what are the qualifications that you need to meet to receive that deduction? Well, it says that you need to be a qualified business. Well, what's a qualified business? Well, in the tax code, and I quote, it literally says to qualify, you need to keep books. And they say usually about multiple businesses. So they quoted separate books, plural. That means each business that you have that is a qualified business that would qualify for this tax deduction needs books. Books are not an Excel spreadsheet. Books are not a bag of receipts or the proverbial shoebox that I can't believe one time in my career someone brought that shoebox over. Yeah, that's a whole nother topic for a podcast because I pulled something out and refused to ever go back in the shoebox, but that's neither here nor there. But you need to have the accurate bookkeeping in that. It's highly recommended. The other thing is when you come to an audit, for example. So the first thing that the IRS agent is going to ask for, they're going to ask for bank statements. Last thing you're going to want to do is have a personal bank account that's also doing your business, because guess what you've just done? You've opened up everything for an agent to actually take a look at, and therefore they can open up the scope of the audit if they find something in there that doesn't match. The second thing they always ask for in an audit is, can I see your book of record? So they want a copy of that QuickBooks, or they want that profit and loss statement, or they want that balance sheet. Well, if you don't have it, you've just given the IRS the opportunity to recreate books for you, which in turn can either match the tax return or not match the tax return. But then you're at an uphill battle, because if it doesn't match the tax return, you have to fight what the IRS just given you. So these are really key, critical examples of why bookkeeping is so very, very important. And there's a funny story in regards to Yvonne and I that, and I'll have you expound on. You might know which one it is, but it's the fact where that gentleman had, I think he had a profit of like $300,000,
Yes.
but his bank account only showed 10. And so we had to show him, and it was he and his wife, remember?
Yes.
And you had to show
Vividly.
him, yes, you had to show him what the deduction was, and we could prove it back. And so here we are, we're like, oh, so you bought something at Louis Vuitton for $10,000. And you, and his wife would go, you didn't buy me anything.
I have no Louis Vuitton.
I will never forget. I will never forget this as long as I live. And this man's getting more and more upset with us, right? And redder and redder. And there was Gucci, there was stuff. And his wife's like, they fought all the way to the parking lot. And then they came back to clarify that he had spent money on his daughter,
Yes.
that it wasn't an affair that he was having.
And the doggy spa.
And the doggy spa.
The $400 a day doggy spa.
Yes.
Yeah.
Yes.
With the dog she didn't want to begin with.
The dog, yeah, the dog she didn't want time to begin with. Yeah. Yeah, we've seen it all. But trust me, this is why books are very,
Very
important. They are.
Well, there's one other thing I wanted to say when you said the mistakes we see the most of. It's in the booking of your payroll.
Oh, yeah.
Also, most clients are booking it as a net instead of gross. You're losing out on expenses that you could be deducting. Because if you're booking it at net, say their gross is really $2,000, you booked it at $1,500. Well, you really paid them $2,000, even though you've got to pay that other $500 to the IRS on their behalf. You paid them $2,000. Now you've lost $500 of expenses or deductions. You add that up over a year, that's $6,000 worth of expenses you could have had to your bottom line on your P&L, to where you maybe wouldn't have to pay as much taxes.
Yeah.
That is another big mistake that
That is a
people make.
big mistake.
Yes.
And one of the audit proofs that the Internal Revenue Service does, it matches tax documents.
Correct.
So if you submit a tax return with wages at a certain level and they got a W-3 for that company that doesn't match, that can potentially trigger an audit, as does the other issue that we didn't touch on was 1099s for independent contractors.
Correct.
That's another thing that people miss out on, is that that might be a good thing. Talk about what if they paid cash to one of their vendors.
If they pay cash to one of their vendors, they need a receipt. They need either an invoice or receipt showing that they paid that cash. My suggestion too is you never pay a vendor or a contract labor person without getting that W-9 filled out first, because if you don't have that W-9, we don't have that Social Security information or the EIN information, you really can't use it as an expense.
Yeah.
But you always want to get a receipt from that contractor, whoever it may be, the individual that mowed the lawn, whatever, or you're not going to be able to use it as an expense. And that was another client we had that lost out on a lot because they could not prove that they had actually paid that. They did it all through, was it Zelle or PayPal something like that, and could not prove it out.
Yeah. And get them to sign it. Get them to sign the
Yes.
receipt as soon as you pay them cash. Have them sign something that says that they received the cash for this payment. That's a way of bulletproofing.
Yes, please don't go cash a check and then hand them the cash, because then that looks like you've taken the cash out of the company yourself.
Exactly. Yes. So now we're going to move into the next topic. And that topic is retirement. So can you tell us a little bit of your journey that has led you up to retiring? If we need to get tissues.
This is where it might get a little emotional, because I had not planned on retiring this early. What led me up to retirement was a medical issue. I went into work one day, told my boss, Monica, that I didn't feel well, that something was wrong. And she sat down, she goes, "What is it?" I said, "I'm not sure." Well, as it turns out, she was looking at me, could tell I was potentially having a stroke, and had to get up and drive myself. I was supposed to drive myself home, and have my sister come and get me, but I didn't. I drove myself directly to the hospital. And as it turned out, I did have a small TIA, and the doctor said I had to slow down or it was going to get worse. So it was kind of a medical condition that forced me, in so many words, into retirement.
And sadly, that is what is quite common, is that people feel just like myself. I have this goal that I've set that, okay, I need to work at least another 10 years. And then
Right.
at that time, I'll sell my practice. All my stuff will be paid off. I'll be set. But Lord,
You
I
never
don't
know.
know what he has planned for me. So anything is possible. And usually what ends up happening, it is something of a medical condition.
It's either a medical condition, or I'm finding out from some of my older friends, it's a layoff
Mm.
or losing your job. And at an age of anywhere over 60, it's sometimes hard to go out there and find another job, even though you're not ready to
Yeah.
retire.
Yeah. Very
It's
true.
it's kind of scary.
It is. Yeah. And please, anyone that is listening, if you feel for whatever reason that you have numbness, which my dear Yvonne did, but for whatever reason, because she's stubborn and she'll appreciate that, and drove into the office and then waited to speak to me, please go to the hospital and get it checked out. I'm just so grateful that she was able to get into the hospital, that they immediately did treatment, and that she has no long-term lasting effects. But
Yeah.
you want to be very, very careful with that.
Yes.
So what are some of the biggest fears and concerns about retiring?
The biggest fear I have is not being able to handle it financially. I know I will be able to make it, but it's that fear of the unknown. The other fear is, what am I going to do with myself? What am I going to do with my time? I'm sure I'm going to find things to do, but like I said, I wasn't ready to retire. I was going to go another 2 or 3 years before, and then I had my plan, just like everybody else has their plans. But I would have to say the biggest fear is the financial aspect of it, because you think you're ready, but when it happens, you realize, oh, I wasn't really as ready as I thought I was.
Yeah, I
Yeah.
can see that. And so how does one emotionally prepare for retirement?
Well, it's kind of like the scenario I told you this morning. You can think you're prepared, and you can prepare for years and years and years, and then when it really happens, I don't think you're ever ready. It's kind of like the death of someone in your family is going to be passing because they're very ill. You've prepared yourself, and the day that it happens, you cry like a baby, like I've done today. So it's hard to be emotionally ready for it.
Yeah, yeah, that makes sense. So what steps do you take to financially prepare for retirement?
I didn't take a lot of steps that I should have taken because I was a single mother raising a child by myself, so it was hard. But I would say start saving early. The minute one of your employers offers you 401k or a simple IRA, I don't care if you can only put $10 a week in, do it. Or if you don't have an employer that offers that to you, go set yourself one up at a bank. I don't care if you're 18 years old, 20 years old, the sooner you start, the better off you'll be. Even though I did try to start young, like I said, life's going to happen. No
Mhm.
matter how prepared you are, life's going to happen. You're going to have illnesses. You might have to take care of your parents. I had to take care of a child, and then a child that had a child, which, life happens.
Life happens.
Yeah.
Yeah, for sure, for sure. And that's one of the things, it's you've probably I've heard lately. There's been a lot of talk about retirement and why, because Gen Zers can't afford to put money away for retirement. They're starting to live with their parents. That's hindering their parents' ability to put away for retirement. And it always kind of makes me cringe when I see these financial planners talk on the news and they're saying, okay, well, by the age of 40, you should have saved 3 times your annual salary. And by the age of 60, you should have 8 times your annual salary. And by your retirement at 67, you should have 10 times your annual salary. And you take a step back and you're like, oh my goodness,
How am I going to make it?
how am I going to make it when you're throwing these numbers? And it's very common, as Yvonne alluded to, in the fact that women, unfortunately, are the ones that haven't put enough away in their retirement. And, we all know the gender pay gap. That's actually very real. Women are not paid equally to their male counterparts for the same amount of work they're doing. They're the ones that there's intermittent absences in their career, whether it's having a baby, taking care of a baby. They're the first ones that go out part-time to take care of an elderly
Elderly parent.
parent or a parent that's dying. And men, I'm sorry to say, we outlive you. So we're going to end up going through our retirement a lot quicker, and we're not saving enough away. We're the ones that aren't planning enough. So there's some things I'll talk about a little bit after this podcast of what I think we could start doing now, because I am one of those women. I was a single mother. I didn't put money in my retirement, and then I took care of a dying mother. I had to pull money out of my retirement to pay for my mother's funeral expenses. I started over. I got married. I moved states. I got divorced. I started all over again. So I'm back into that process of starting all over again. So it definitely hits you. There's no way in the world I will have 10 times my annual salary by 67. However, there's some things that I'll talk about a little bit afterwards of what I think one can start. What are some of the biggest challenges that you faced in regards to getting ready for retirement?
One of the biggest challenges I faced that I was not even aware of is when I signed up for Social Security. I signed up to start it on August the 1st. When I got my determination letter, yeah, they were going to start it August the 1st, but I don't get a paycheck until September 10th, which means I'm going the whole month of August without a paycheck. So it was like, oh, Lord, what am I going to do? That was a big challenge. Luckily, I've been able to put enough money back to get me through a month or two, but just got to preparedness. You had no idea. And then the first check you get from them, they take out 2 months worth of your Medicare payment. So that was a little scary too.
Yeah.
And let me tell you right now, you don't always get your check on the first of the month. So you're going to have to go out there and make changes on when your bills are due. I know most people can't change their rent dates, but you might have to change your car payment dates or your credit card bill payment dates, that type of thing. That was a challenge for me in figuring out how I was going to do all of that.
And then you only get the one check, so you have
get the
to
one
divide
check, so
that through
you've
the
got to
whole
figure
month.
out, yeah, pay all your bills at the first of the month, I guess, and then live off of what you have. I don't know. I'm used to getting paid twice a month. So now I've got to figure out, how am I going to do this?
Yeah.
How am I going to change things around to where I want to pay it all at the first of the month, but what do I do if I run out of money at the end of the month?
Yeah.
Or no groceries, or I need gas?
Right.
You've got to find a way to budget that and hold it back.
Yeah. Yeah. How do you think retirement today is different from what it was like in previous generations? I know this is a doozy,
It
or
is
what you would call a woolly booger.
I'm from Texas. It's woolly booger.
These are all the Texan sayings I learned having a bond with me.
I think it's different because there's not as many couples retiring together. It's more of women having to do it on their own, or even men having to do it on their own. The economy's worse, naturally.
Mhm.
A lot of corporations, unfortunately, aren't offering the retirements like they used to, where you could put money in yourself, whether they matched it or not. And it's harder too, because like you said, a lot of these parents are still having children live with them that they're having to take care of, which they haven't been able to downsize maybe to a smaller home that's not going to cost them as much, or even a smaller apartment, or just go down to one car instead of two. So that's a challenge I see there. I mean, I've watched my brother and sister-in-law go through it, and I worry about my kids. Are they going to be able to make it when they get older as a retirement?
Yeah. Yeah. What role do you think society should play in supporting retirees?
That's even tougher because I haven't thought about it. Be respectful and kind. If you see someone in need, try to help them. I don't know, take care of your elderly, like these foreign countries do.
Yeah.
Respect them and take care of them. I realize you might not be able to go out and bring them into your home or buy their groceries, but even just a smile or a kind word, I've noticed has made a difference.
One of the things I like to add on that part is when my mother was sick and had to be put into a facility. Um, One of the greatest joys that I got was to sit down and listen to all the people that were there. They have stories to tell and life experiences. And I think I learned so much from just that opportunity alone.
Listening.
And yeah, just listening. Had such a fantastic day. And I think, checking up on the retirees, making sure they're okay, asking if they need help with their groceries or going shopping or to a doctor's appointment, because nowadays families aren't all living, back in the
You're
day
not
they
all
were
living
all
together.
living together.
It's not
And
a village taking care of
no,
everybody anymore.
everyone's across the country or not even in the same, across the world is how we've all become. And so knowing that there's some support.
Support. I
Yes.
guess also too, not looking at retirees as useless.
Yeah.
We still have a lot of talent. We still have a lot of things that we can do that we can help others ourselves. Don't look at us as a piece of trash that is no longer important to society,
Yes. I would have to
because
agree with that.
we still have good ideas. We still have talents. We can still do things. We can still help ourselves,
Mm-hmm.
other people.
Yep. Yep.
Yeah.
So one of the things I wanted to add before we wrap everything up is, um, if you happen to be one of those people that is in the same boat as I am, and I'm not going to have 10 times my annual salary saved up in a 401k, what are some of the things you can do? Because it's daunting. Just like Yvonne was saying, it's daunting. And some of us don't even know if Social Security is going to be an option for us when we retire. So, what can we do now, possibly, that will help alleviate some of those fears? And so, I can tell you is go back the old fashioned way, pen and paper, take a budget. Write down the expenses that you pay for groceries. Write down how many times you go to Starbucks and buy that cup of coffee, or how many times you maybe go to Chick-fil-A or go out to dinner, or your clothing budget, or whatever, your home, your housing, your utilities. Find out now what you can cut. Start to make those changes in your lifestyle now, so when you do go to retirement, they're commonplace.
It's not a culture shock.
Correct.
I am learning very quickly to be content with what I have and to be very grateful and thankful for what I have,
Yep. See,
and that it's enough.
and it's things like that. And the other thing is if you are out there working now, one of the things that I did, because yes, actually today is my 1 year anniversary of buying my own home after my divorce. So it happens to be my 1 year anniversary. I've started to put a plan together where I'm going to have my home paid off if no unforeseen things happen in 10 years, because I know that at retirement my home's going to be the biggest debt. And so I'm making strides while I'm still able to work and have the earning power and the strength to be able to pay off that home so I don't have that debt, and also strive to pay off the rest of my debt at that time. The other thing is maybe reassess your investments now. Interest rates are still good. I know there's a talk they're slowly going down, but there are some CDs still out there that are generating 4.75% interest. Maybe you put some money away now and just leave it and don't even think about it. Downsize. Maybe your kids are out, they've grown, they're gone to college. Here you're sitting in this 3,500 square foot home. Yes, I know you love your home and you have all these beautiful memories, but with a large home comes large bills, large insurance, large utility bills, large maintenance. I mean, trust me, I live in Colleyville, Texas. I suffered hail damage. I have to get a new roof. Now my insurance is going to go up, and I still have to come out of pocket almost $10,000 just to replace my roof. And so there's things like this that we need to think about now to get prepared for, because truthfully, I think it's really unrealistic for one to say you need to have 10 times your annual salary saved by the age of 67, because that does not take into place anything that life could unexpectedly throw your way. And life happens. It happens to the best of us. And there's going to be things that are going to take us out of pocket, whether it's an unplanned surgery, death in the family, taking care of your children. You never know. So instead of being concerned that you're not going to make it, let's start thinking about things we may be able to do now that we can prepare ourselves better in the future. And so with that, what kind of final thoughts do you want to leave the people that are out there listening to the Wealthy Wallet, whether it's in regards to bookkeeping or retirement, or hey, even Decision Financial Services for that matter?
My final thoughts to any business owner out there is please, please keep your book straight. If you can't do it, get somebody that can, because look at it this way. You get somebody that's a professional that can take care of your books for you, then you can go out there and make the money, not have to worry about it. On the retirement part, live one day at a time, and I'm learning daily not to worry. And then when Monica was talking about, I have a little funny here, she's talking about 8 times your salary by the time you're a certain age. Well, I talked to my financial planner, and they told me that I only have to keep working for 3 more years after I die to afford my retirement.
And there you go. And there you go. So I want to thank all of you for tuning in and watching this episode. But more importantly, I want to thank Yvonne here. Yvonne has not only been one of the best bookkeepers I've ever had. I never imagined when she came on board 6 years ago that not only would she help my business grow, but that she would become family to me. She is, no joke, the best of my friends. And I know deep down in my heart, I would have never made it through my divorce and some of the darkest hours of my life without having her hear from her Texas-isms. I've learned a lot of things. I can't even remember what some of them are, but they'll come to me throughout the podcast. But truly what I've learned is that what the meaning of true friendship is. And so I am so grateful that you answered that ad over 6 years ago. I am so great. I scared the dickens out of her because I hired her on the spot. And I am so glad I did, because this has been a wonderful ride, and I know I could not have done it without you. So I truly appreciate you being on my podcast on your last day.
Well, I appreciate you having me here, and right back at you. I couldn't have made it the last 6 years without you, and my friendship, or your friendship, means more to me than you ever realize. This is the hardest day.
I know it is, and I thank you so much. So thank you, everyone, for watching. In 2 weeks, we will be having an estate planning attorney on here to talk about death. I know it's not pleasant, but that's another thing that we need to be prepared for. I mean, obviously, you got to pay 2 years into death to even afford your retirement. So it's
3 years.
Oh, 3 years. I stand corrected. 3
After
years.
death to afford it.
To afford it. So thank you, everyone. I appreciate it. And I look forward to doing this again in a couple weeks. Bye-bye.
Bye.